Good morning, everyone, and welcome to today's PPP Loan Forgiveness and Planning for the Future webinar. My name is Michelle Silverman, and I'm your facilitator here at Citrin Cooperman. So before we begin, I'd like to go over a few items so you know how to participate in today's event. The webinar will last approximately 1 hour, ending at 1 p.m. Eastern Time. You are in listening mode only using your computer audio by default, and today's session is being recorded. You will have the opportunity to submit questions to our presenters by typing your questions into the Q&A icon. We will collect and queue your questions and address them at the appropriate time. So with that, let me hand this over to you, Pat. Take it away.
Thanks so much, Michelle, and welcome to today's webinar, Surviving the Economic Downturn, Maximizing PPP Loan Forgiveness and Planning for the Future. As Michelle said, my name is Pat Cummings. I am Citrin Cooperman's Chief Risk Officer and Managing Partner of Industries. And to start, on your screen, it's just our normal disclaimer. Nothing discussed today should be construed as legal, accounting, or tax advice. So everybody can report to my general counsel that I promised that I would do that and did it. So to start, next slide, please. I'd like to introduce my partners who are participating on the panel today. Aaron Tchaikovsky is the co-leader of the firm's franchise practice. Mike Zaborowicz is the co-leader of the firm's staffing practice. And last but not least, Kevin Ryan, who is a partner in Philadelphia and a leader of the firm's COVID response unit. All of us on the panel today have been deeply involved assisting businesses, clients through this crisis and advising to help our clients to the best of our ability. For today's virtual lunch, we're going to go through a number of topics. We welcome your questions, and as Michelle said, please feel free to put your questions in the Q&A function. We'll try to address as many as possible. If we don't get to your questions, we will reply supplementally to you via email. Next slide, please, Michelle. So for today's discussion topics, Aaron is going to give us an update, the latest and greatest on ongoing activities in Washington, largely related to the PPP programs and some proposed changes. We'll also discuss other topics related to PPP plus other relief options. Kevin is going to also discuss other things businesses should be thinking about, including 13-week cash flows. We'd also like to share some success stories. A number of our clients have really thought outside the box, and we'd like to put those clients a little bit up in lights just to show that there are some hopefully rays of sunshine. And towards the end, we'll wrap up and then we'll have some time for Q&A. So next slide, please. So Aaron, you've been very involved with the IFA, the International Franchise Association, with the Paycheck Protection Program Flexibility Act that's currently being considered by the Senate in DC. What's your current understanding of where that currently stands, including possible changes, revisions to the PPP program?
Thank you very much, Pat, and good afternoon to everyone on the East Coast. Being involved in the Franchise Association, they're based in Washington. I'm on the board and very involved in a lot of these details as they put together some of these programs and some of these asks of the House and the Senate. And we're very fortunate the Franchise Association has a very strong lobbying group and is literally right there to the minute of what's going on. As everyone knows, and additionally, the International Franchise Association is not just working to help franchise and helping help small businesses, which is really where this seemed to have fallen apart when it first came out, and they've made a lot of pushes to get that changed. Now, as most of you on the call know, that the House passed HR 7010 last Thursday night, the Paycheck Protection Program Flexibility Act, and the vote was 417 to 1. Very close vote, obviously, not 100% unanimous. That's important because the hope is that it was going to be unanimous and be presented to the Senate as for unanimous consent. The final bill text changed up to the last minute before it was voted in last Thursday. And in the final text that was voted on, a lot of people are aware that, and again, this is right now until the Senate passes this. This is not official law, but this is what it says right now, that the 75-25 split of the use of the funds in this law, in this HR 7010, it is now 60-40. They're changing the 8-week period to a 24-week period for the use of the funds. They're extending the expiration date from June 30th of this, which would include some of the safe harbor items, to December 31, 2020. All new loans written after the bill is finally passed would be up to 5 years versus 2 years. And there's also something in there as far as the deferred payroll taxes on the PPP loan proceeds, being able to defer those payroll taxes. So when the bill actually left the House, it then moves to the Senate, where the hope was that it would be considered very soon and approved by unanimous consent. That was hopefully going to happen yesterday. Under unanimous consent, what ends up happening is that it can move very quickly, being passed in the Senate, go right to the president for signature. However, if any single senator objects to the legislation, it gets put on hold. And of course, then it gets pushed off to actually have to go for an actual vote. Unfortunately, what had happened was Chairman Rubio had some issues with it, which it turns out as of last night, Leader McConnell has been able to convince Chairman Rubio's office to accept the bill the way it is, and they'll just make some structural drafting changes with the House bill when it comes through, but was willing to vote. But of course, being that this is also politically driven, there's now an issue that Senator Johnson from Wisconsin right now has some holds on this bill for other issues. Ironically and sadly, Senator Johnson's background is actually that he's an accountant by trade. So that doesn't necessarily help our issue here, being that right now the accounting is holding up the politics, and that seems to be an issue. Had some calls as late as last night, and I'm watching this morning to see if anything's come through this morning. Nothing has come through this morning, but as of last night, I've been told that it could be another day or two because of Senator Johnson holding this up. And right now, Mitch McConnell is still trying to work to appease Senator Johnson with this act. If it doesn't happen, what ends up happening is this will have to go to a roll call. And a roll call, unfortunately, ends up being a vote in person. And because of what's going on in Washington right now with the protests and people not being able to get back there, they were hoping it would get resolved in a day or two, but it could actually push into next week. As of a call I had this morning, they're still hoping that there's a chance this could be signed today or tomorrow. The Senate had their own bill that they had put in there, some tweaks to what's out there, and some of the differences in the Senate's version of the bill is that instead of they want to leave the 75-25 split in their expenses, but they were willing to go for 8 to 16 weeks. So there are still two major issues at play. The concern here, and this is what started with Chairman Rubio when he started to bring up his issues, the issue was that the concern that people would inappropriately use the money if they had that flexibility of when to do it. Hire an employee back this week, not next week, not the week after. So right now it's hung up in politics. There's still hope that that Mitch McConnell will be able to convince Johnson's side to make these changes, accept it, and hopefully still go for the unanimous vote, which could be as soon as today or tomorrow. That's as far as that goes. Now, because it is Washington, there are a lot of other things that are going on in Washington as well, other acts that are going on. There's an act right now that's being backed and is calling on Congress called the Clean Start Back to Work Tax Credit. This is something we haven't heard anything about. It's at the early stages, but seems to be a bipartisan act that looks like it has a lot of legs to it and has a possibility of really going through. This act is creating a tax credit for all business entities to help defray any unforeseen or increased cleaning costs associated with fighting the coronavirus. The credit will be temporary, it'll be capped, it'll be used to offset the cost of cleaning services, cleaning products, any type of sanitary related equipment, and also as well as obtaining certification for the cleaning. And this is critical right now because as the government is rolling out the Reopen America, one of the items they're stressing is safety to the workers and safety to the customers. And they're adding tremendous costs to the small business that now actually can't operate at full capacity. So this is actually a great move going forward. Next slide, please. Interesting data that I just wanted to share with everybody on this call. What you're looking at here is how much was given out of the money that was set aside. And as you see right from the start, people were jumping on getting the money. A huge jump from I'm sorry, hold on.
Aaron.
Yeah, a huge jump, obviously, from 416 to 51. And then all of a sudden, there were some Q&As that came out. The frequently asked questions came out. And the frequently asked questions came out and stated that money had to be given back by a certain time or there are huge penalties. 5/8 was the original deadline. People rushed to give money back, and you see money was put back in. And if you go to the next slide, you'll see that the average loan size at that date was $114,000. The average loan size 2 weeks earlier was over $175,000. So what's happening is these PPP funds actually turned into what we were looking for it to be, which is helping the small business, not helping those larger corporations that were getting the $10 million or as much as they could, but it really was meant to help the small business stay in business. Pat?
Thank you, Aaron. Kevin, as it relates to additional assistance for small businesses, are there still funds available for the PPP? Everybody's already talking about forgiveness, but can new borrowers seek funds from under this program?
Hi, Pat. Thank you, and good afternoon, everyone. Michelle, could you go to the next slide, please? We'll talk about the different options, but Pat, yes, there are still funds available. And through the last few days, a few different bankers have reached out just to reinforce the fact that they are still interested in lending and that there is still about $100 billion available on the PPP. Additionally, there's some more help on the way and other relief options available to business. So you can see on this slide that the first column is the PPP, and while things have been changing as they rush to get this out and now it's coming closer to the end than to the beginning, there are still some moving targets, but you could see that the available aid was $659 billion. It was available to sole proprietors, independent contractors, and companies with less than 500 people. And as probably most of you on this call have already done this, the application was 2.5 months of payroll, which can become grants. And that's why this has been so wildly successful. The next column is the EIDL loan. And the available aid there was $50 billion. It's also available to sole proprietors, independent contractors, and companies with less than 500 employees. There were up to 10,000 in grants and low interest loans. And now I was told that there is about a 6-week processing turnaround. And these are going to be capped at $150,000. So there is still a lot of demand for these, and there's just a lot of work to do with the various lending institutions to turn them around. The next column is the employee retention credit. So not so much money that's being lent, but some tax credits that are available. And these are going to be up to $5,000 per employee. And the rules are going to differ for companies with 100 employees and below, or 100 or more. And eligibility cannot accept PPP loan, must be fully or partially closed, or have a 50% drop in quarterly gross receipts. So these are just some of the points on the ERC. They certainly merit more discussion with your tax advisors. Hopefully that's Citrin Cooperman, by the way. And then you also have the payroll tax deferment, which allows you to defer the employer portion of the FICA payroll taxes, which would be the 6.2%. And you can defer them until you receive the PPP loan forgiveness letter. That is, this deferment has a 0% interest rate. Half of it is going to be due in the end of December 2021, and the other half at the end of December 2022. So depending upon how long it's going to take for this loan forgiveness letter to be received, and as Aaron mentioned previously, if this time period is extended, this may end up being more dollars than anticipated that you're going to be able to defer. So if you haven't done this, you do want to look into this and talk to your payroll service provider so that they can assist you. They're certainly cognizant of what needs to be done so that you can get that squared away. Now, new help is on the way, and that is the Main Street lending. And this is the federally backed loan program. This is for companies that are larger and may not have necessarily been able to take advantage of the PPP loans. And there are 3 different loans under this program. The MSNLF, which is the new loan program, the MSPLF, which is the priority, and I'm sorry, the rain just started here, so it may be a little noisy in the background, and the MSELF, which is the expanded loan program. The new and the priority loans, the minimum loan is $500,000 and goes up to $25 million. And the expanded loan program ranges in size from $10 million to $200 million. With all 3 of them, no principal is to be paid in the first year. And in the new loan program, it's going to be, the remaining amount is going to be amortized 1/3 at the end of years 2, 3, and 4. And then with the priority in the expanded loan program, the loan's going to be amortized 15% at the end of year 2, 15% at the end of year 3, and the remaining 70% at the end of year 4. These loans may be secured or unsecured, but I believe that the eligible lenders are going to require collateral. They're going to be looking at your balance sheets. These are not just going to be, you're able to get the loan. There's going to be more scrutiny here. And one of the aspects of this is they're going to look for eligible borrowers to make commercially reasonable efforts to retain employees during the term of the loan. And then lastly, don't forget the additional relief programs, which are various grant programs at a federal, state, and local level. Now these dollars go quick, as I'm sure a lot of people have completed the applications only to be told the money's been gone. But New Jersey has a grant application that can be completed today. And there are also private grants that are out there. Landlords, obviously, unless you own the building, you have a rent expense. And a lot of landlords are understanding of the COVID and the issues faced with that. So they've been working with their tenants to help out. So that's an area that you should also focus on. You may not have rent forgiven, but you may be able to get a deferment or some type of reduction for a period of time to help get you through this tough time.
Thank you, Kevin. Next slide, please, Michelle. So as most of you already know, the SBA and Treasury, they released the loan forgiveness application and interim final rules. These documents certainly provided us with some clarifications. Mike, can you discuss the questions that have been answered thus far, understanding we're still awaiting additional guidance?
Thanks, Pat, and thank you everybody for joining. Hope everybody's staying safe. And Kevin, I think you sent your weather over my way now. So as Aaron mentioned, there's a bill that will likely pass in Congress in the coming days that will have a significant impact on the PPP loans. However, over the past few weeks, the SBA has released several pieces of guidance via the forgiveness application and 2 subsequent interim final rules that essentially provided some long-sought clarifications. And we wanted to highlight some of these key clarifications. As it appears now, I don't think that any of these clarifications will be affected by the pending legislation, but we'll see about that. And then also these clarifications offer companies options to maximize forgiveness. So obviously this is a topic that can go on for hours. So if your questions are outside of these topics, what we're going to cover here, please include that in the Q&A section. We'll try to address it. So first is the concept of the alternative payroll covered period, and that's versus the traditional covered period, which essentially starts when the loan is received. And so, the purpose of the alternative payroll covered period is essentially for administrative convenience. It's to line up, your forgiveness with forgiveness period with your payroll periods, and that's to avoid kind of cutoff issues on the first period and maybe the last period, especially when it comes to providing documentation. And I know we'll talk about the documentation a little bit later on. And the period is essentially calculated as the first day of the payroll period starting after you receive the loan receipt. And so, it's up to you to choose whether you're going to use the alternative period or the covered period. It is just for payroll cost. When we say payroll cost, it is gross payroll. I know there's initially some talk about possibly only net payroll being forgiven. Gross payroll is forgiven. So it's your choice if you wanted for payroll costs, whether you want to choose the alternative pay period or the covered pay period. But no, if you choose the alternative pay period, you will essentially be dealing with 2 different periods, one for payroll and the traditional covered period for non-payroll. The next clarification is a clarification on expenses. It's essentially, paid versus incurred. I think initially there was a concern that costs, expenses need to be both paid and incurred, and the forgiveness calculation clarified it that it's paid or incurred. And then one of the interim final rules gave 2 very good examples for both non-payroll and payroll costs. So for on the non-payroll, when I say non-payroll expenses, essentially interest on mortgage obligations, you have rent expense, and that's now for real and personal property. So now auto leases, equipment leases, the rent expense on that can be included. Utilities, transportation payments. And so, the example for non-payroll costs essentially said, that you can, for eligible forgiveness or incur costs that were paid during the covered period. One of the payments was for expenses incurred prior to the covered period, and then also include a portion that was incurred but not paid, as long as that it is paid on the next billing date following the end of the covered period. So, and this is similar for the payroll example. Again, a very good example. The forgiveness, can include expenses paid during the alternative covered period, in addition to costs incurred during the period, as long as they are paid on or before the first regular pay date after the end of the covered period. So again, you cannot count both paid and incurred twice. I think that's rather obvious. But in both cases, it appears that you can have a mix of paid and incurred, which lends itself to some strategies to maximize forgiveness. Let's move on to the FTE calculation, the full-time equivalent calculation. Obviously, PPP was intended to restore employment, and the measure of employment is full-time equivalents. There is a reduction calculation, which is essentially the average full-time equivalents over the alternative or covered period, which is the numerator, and that's divided by the average full-time equivalents over a look-back period, the denominator. And again, that can reduce your eligible forgiveness. It's important to find an option that limits the reduction, right? So the forgiveness application provides us with two options to calculate full-time equivalents. The first being anybody that works 40 or more hours counts as 1, and anybody that works less than 40 hours is a factor of 40. So if you work 10 hours, you're 0.25. If you work 30 hours, you're 0.27, and so forth and so on. The second option is anybody that works 40 or more hours counts as 1, and anybody that works less than 40 hours counts as a half. So a little bit different, and it's important to choose the option that provides you with a lower reduction ratio. And then the second portion of that is looking at the denominator and then choosing the look back period, and our 3, if you factor in seasonal, choose the one that provides you with the lowest average FTE over the look back period. So again, some options, and we recommend that you take a look at all of them to see which one benefits you most. And then let's finalize with the FTE reduction exclusion. I think this is a lifeline provided to companies that were struggling to have people return to them for various reasons. And essentially the exclusion states that, if you make a good faith offer to rehire somebody and that offer is rejected, then that person would be exempt from negatively impacting your FTE reduction calculation. The FTE does state that you must have documentation of the offer and the refusal. And although this documentation is not required to be submitted with the application, you should have it. SBA can request it, upon final review. So still a lot of moving parts, but these updates, I think, did provide some clarity and then certainly options to maximize forgiveness.
Hey, Mike, covered utility payments include transportation costs, and we're getting a lot of questions in terms of what is the definition of transportation cost? Do you have any insights into what can and shouldn't be included in that category?
Yeah, Pat, and I think that's a very good question, and certainly one that has not yet been addressed. I think most utilities on the the list are self-explanatory, but transportation is often referred to in definition only. So the question is out there: what exactly is included in transportation costs? Does it include payments for fuel, maintenance, for vehicle or airplane that's used in business? Could it be charged for delivery charges and so forth and so on? So the answer is maybe, but without additional guidance, we think the borrower should be cautious about including these payments. And if a borrower does include things, such as operating costs for a vehicle, just know that current guidance does not address it. So it's kind of one of these things, wait and see, and let's see if there's an FAQ that further addresses it.
Thanks, Mike. Next slide, please. Aaron, we've had several discussions about the importance of maximizing forgiveness, but not at the expense of business owners opening and running their operations. Would be wonderful if you could share your thoughts on this topic with the group.
Thank you, Pat. We've spoken quite often with a lot of our clients. I've given some webinars to large groups of franchisees of the franchisor, and some of these franchisors have thousands of franchisees out there, and a lot of these loans where they've received these small loans. One message that I constantly give is run your business for the business, don't run it for forgiveness. Forgiveness is great, but keep in mind now you've got cash in the business right now to help you, and try to sit there and figure out what you're going to need so that you can be in operations, not when the money runs out, but even afterwards. This is your kickstart to keep your business alive. So my first suggestion to everybody is make sure you're still running your business as a business. That's the first thing you should do. And in doing that, you're going to find that a lot of the costs that you spend this PPP money on would be in the normal course of business, because that's exactly what the rule requires. So the question comes up then, but this forgiveness sounds like a great idea. It's free money. Why wouldn't I try to get as much forgiveness as possible to offset this? So my advice to those that have received the money is follow the rules, documentation. Most important word is documentation. Because a lot of these loans were given to small businesses, there's some businesses I know that received $12,000, some received $25,000. Yes, we've got some clients that received $10 million. But the idea behind documentation is, keep in mind that there are 7 consent forms that you as a business owner are going to be signing. You need documentation supporting those. When you apply for forgiveness, each one of these lenders are going to have some sort of a portal set up. The volume is astronomical. The number of banks, the 5,500, 5,800 lenders that have lent all this money out are going to be inundated with all of these applications for forgiveness, and they're not going to have the time to deal with something that's missing some documentation. The SBA requires that when it comes to forgiveness, you use the form that they came up with as far as application, or the lender's actual form for application forgiveness. Either case, there's going to be a tremendous amount of documentation. Most importantly, payroll. And when I say payroll, think about a small business that's just doing their payroll by hand, a handful of employees. This all has to be done electronically. You're going to need documentation of payroll during certain periods of time, their hours worked, the rates of pay, and be able to break out your payroll during whatever period you're going to be using to apply for forgiveness. Again, it has to be in some sort of a format that you can upload this and send it through a portal. Very, very important. During the time you're spending the PPP money, you signed a consent saying you're going to be spending it only on these certain areas. Whether it's 75, 25, or 60, 40, either way, there's certain costs that you're allowed to use the money for. You must document how you've spent that money carefully. And again, in the normal course of business. Don't try to be cute and say, well, let me see if I can pay some additional costs I normally don't pay now. Whatever's done, do the regular way. There are people that are trying to get other things through, and I say, look, you're filing this consent form. You know, you sign a consent. If there's any suspicion that you were dishonest on that consent, not only there won't be any forgiveness, but you also run the situation where the loan could be called completely. That's absolutely important. Another very important thing I tell everyone who's going for the forgiveness is, don't assume if the law is not black and white, don't assume it must mean this. Had an example of a case where somebody it came into the month of April and May, and they were going to use May and June as their months, and they still owed rent for March and April. And they're saying, well, it's paid or incurred during this period. That's 4 months of payroll. Is that okay to do? Because it is payroll, normal course of business. I owe this rent. The reality is you could assume, because the law doesn't really specifically say you can't pay past due amounts. It specifically says you can't prepay. But again, that's an assumption. It's not black and white. I would be very cautious to make sure you follow the black and white rules that are in this. And another critical point here is that the timing of all this. When this first came out, the timing was that you had to file for forgiveness within 90 days of your loan being approved. Not when you received the money, but when the loan was approved. That right now is in flux, because obviously if they're extending it to a December 31 period, the option to use the money for the safe harbor, that whole thing has to be revised. So right now, there is no discussion on that. The only discussion we do have is, once you apply for forgiveness, the bank or the lender then has to review your application for forgiveness in conjunction with your original application for the loan, make sure the two of those agree with each other and there's no misinformation there. They then determine what you're entitled to for forgiveness. And they have up to 60 days to make that determination. Once they're completed, they then send that information to the SBA, who then has up to 90 days to approve what the bank said or question it. So you're looking at a period of your 90 days, let's say, to file for the applications, 3 months there, 2 months for the SBA. Then you have 8 months in total before you might even see, potentially, where you might see some of this forgiveness. So when I say run the business to run the business, you want to make sure you're still around as this is going through and all of a sudden get hit with a loan. So run your business, normal course of business, use this to help you out. And the best thing you can do for yourself right now for increasing forgiveness is start gathering documentation today. Because the last thing I could say is that the 60-day period for which the bank has to now calculate your forgiveness piece and verify the information, they're going to be inundated. And banks are telling us, lenders are saying all along, get it in early, because the only way it's going to go through quickly is if you get it in early and you get it in complete. So contact your banks if you can, contact the lenders. Most of them do not have the information available yet as to what you need for application, but it is going to be similar to what the SBA put out, but start accumulating documentation right now.
Thank you, Aaron. Next slide, please. Kevin, I'd like to talk about what businesses should be thinking about today. Many of the states are thankfully reopening. Businesses are thinking about emerging. What should business owners be thinking about beyond crisis management?
Thanks, Pat. But first, I need to interrupt this for a weather alert. I just lost power here, and not because of non-payment, because of the weather. So in the event I'm talking and I get interrupted, I'd ask one of my partners to just kind of run with this. Hopefully we'll be good. But Pat, a few things the businesses need to think about as they open up again or reopen or open fully are cash flow, and cash flow. While we hope the worst of COVID's medical issues are behind us, that may not be the case with your business and its cash flows. Many businesses were able to help make ends meet because they were the recipient of a PPP loan, but those loans are not a panacea. They were intended to be a short-term fix. For many of those companies, there will be no more loan proceeds to count on, and they may even have to begin to repay some of their loans. Because companies are facing more uncertainty and volatility than ever before, it is imperative to have a firm understanding of your business's changed outlook and cash needs. A great tool to utilize and assist in this endeavor is a 13-week cash flow projection. 13-week models are more common because they cover a full quarter of a business year. And also because they cover a shorter range, they allow for more accuracy than an annual cash flow. Preparing a 13-week cash flow will force you to look at your business inflows and outflows and make decisions about items such as capital expenditures, whether or when you need to access your credit facilities, where expenses can be reduced, and even areas such as making sure your receivables are being collected as quickly as they were pre-pandemic. This cash flow forecast will allow you to prepare for any upcoming liquidity issues and quickly pivot where needed. Remember, this should not take the place of your company's budget, but complement it, as they will have common components. So when we look at, and we've cut this down just so it would fit to the screen, when we look at this 13-week cash flow, up top what we have are, the 1, 2, 3, etc. That's going to be the weeks, and then right below that, the week ended. That first blue number, that 50,000, that is going to be where these assumptions begin, but that's going to be an actual number. So that 50,000 is going to be your cash balance. You're going to want to put that in there. And then what you want to enter in that cash collected, or if you're going to need to hit a line of credit, or if you have PPP loan proceeds or any other type of loan proceeds, that is all going to go into that top part under sources. Now, keep in mind, this is a cash flow, not a budget. So these are going to be actual collections. It's not going to be 1/4 of what you estimate your monthly revenue to be. This is going to be what you anticipate coming in on a weekly basis. For instance, some businesses get paid monthly. So they're going to only have one entry during these first 4 weeks. That top part is going to be the money coming in, and below that is going to be the various disbursements. I found it beneficial to break these out as much as possible. So in this instance, we put in cost of goods sold, and you see that that has an entry on a weekly basis because you're going to be paying your suppliers weekly. But you can also see there are going to be different numbers, and I'll talk about that in a moment. Then the next line item, we have payroll. And this example is a bi-weekly payer. So every other week, you see the larger expenditure. And then you're going to go through some of your expenses. You're going to have some legal fees. You're going to have the accounting fees, which are probably the best expenditure on here. You're going to have some marketing fees, utilities, all different types of expenditures. Now, what you can see in this example, what was done is that we know that cost of goods sold, in order to continue to get product, say for this company, they're going to continue to have to pay their vendors and suppliers. So there's a weekly entry in there. There is an understanding that each week they're going to have to make those payments. And then the payroll, as we discussed previously, that's going to be every other week. Legal fees, you can see, is in that second week, but it's been broken out and they're paying that a different week than they're paying the accounting and the marketing fees, because that's going to allow for more cash flow flexibility. You see, utilities there's going to be a certain time of each month that you're going to need to make that payment. That one's going to be a little tougher to break down into payments. And then you're going to see ABC company, again, instead of making a larger payment, they're paying them on a weekly basis. And in this one, in week 9, the company knew it was going to have a capital expenditure, and what it did was wait for a week that is going to have a higher cash flow. You'll see that at the end of week 8, it had 69,500. So they felt that that next week was going to be a good week to pull the trigger and purchase that necessary capital expenditure. And if you go up to sources, you'll also see that while they had a $25,000 expenditure that week, that was also the week that they procured money from their lender for the capital expenditure. And what you're going to see is you're going to have total disbursements on a weekly basis, and they're going to change significantly because the payroll is going to skew those every other weeks. And in this example, how we set it up is that if there's a negative cash flow for the week, it shows in red. And that's kind of a good barometer to look at to see where there are going to be weeks where cash flow is not a positive. The other important item is that you need to know where you're going to feel comfortable with your cash balance. So you'll see on the left-hand side here in these bullet points, kind of come up with your magic number where you don't want the cash to be at a balance lower than, maybe it's 50,000 here. Maybe for your company, it's, you don't want your cash to be less than 2 months worth of G&A expenses. You'll know what that is. So when you arrive at a week that's going to be close to that, you need to modify or move some of your expenditures so that you don't hit a number that's below that magic number. So if you look at week 6 here up top, you can see that it's not going to be, it's estimated to be a low collection week, $10,000. So we had talked about that, understanding that and planning for it. That's going to be our lowest disbursement week because we don't want to have the cash flow go too low. So in a case like that, you want to look to see if your accounts receivable collections are lagging. Why is that? Is there something that can be done proactively to communicate with your customers and clients? You let them know how important they are to you, but also let them know that you're running a business and you need to be paid timely because you need to pay your suppliers and your employers timely. And we're all in this together. We want to make sure that the businesses can survive. So we want to collect our money. We want to pay our money. But if you also find that it's a little tougher getting out of the gate here now after COVID, talk to your vendors. See if you can get better terms. Instead of 30 days, perhaps it's 60 days, or perhaps it's spread out over a weekly basis. Like in this example, ABC company, you can see they're just getting paid weekly. So in this situation, they were owed money and the company is just paying them down, saying, hey, we're here, we want to continue to remain a customer. We just don't have as much cash as we need at this point. We want to work with you and pay it down. The tool here it's a little work, but the investment is going to be well worth it because this is going to continue to move forward. As the week passes, you put the actuals in that first column, and it's going to carry forward the cash balances to the future. And this is a great tool to talk to your partners, your investors, your lenders. It's important now. The banks are anxious to see how you're doing. I've seen a lot of emails recently where that's a big part of the bank's questions. Send us some updated numbers. Let us know how you're handling this situation, what you foresee. Are there going to be some bumps in the future? If there are, it's nice to be able to tell them, hey, we've done this 13-week cash flow, and we see in week 11 that we're going to have a big expenditure, or the collections aren't going to be great. Or maybe it's a multitude of issues that just kind of converge in a certain week. Let the bankers know what's happening. Let your partners know what's happening. This is going to be very insightful for you, and I think it's a tool that can carry you through, especially during this difficult time, but through the next couple of years, you'll have a much better handle on the cash flows of your company. And some of the other items we need to think about, and as I talk to various other professionals and lenders and clients, cybersecurity has become a big issue as individuals are working from home as opposed to in their office. There's a concern about whether or not the security is strong enough. Maybe after all this, companies have found that, hey, we don't need to be in the office together as much for a multitude of reasons. And maybe part of it is, hey, can we reduce our rent by having a smaller footprint in the future? Is that going to change your nexus? Is part of that discussion, hey, I'm willing to do this or willing to do that, but how is that going to impact me tax-wise? So think about the nexus situation and how that might change. Others have said, I want to take this opportunity to acquire a competitor who may not have fared as well during this pandemic. This could be a good time to look out there, and if there's someone that can help you grow your business by acquiring them, Or is this the right time? Maybe they're just fed up. Maybe they're closer to retirement than you are, and they're willing to listen to an offer that perhaps they weren't willing to listen to. Is now a good time for estate planning? Perhaps you could give some assets that have lower values now, and you're getting a whole lot more for that gift now than you would have 3 or 4 months ago. Is your company not running as efficiently because, again, it's spread out in different places? Are you able to outsource some of your operations where perhaps you don't need to rely on your staff as much? Maybe you're finding they're just not as efficient working from home, or they can't put in the hours because they have family that they need to take care of. So all different opportunities can come out of this crisis, and you want to look to see and talk to other people you know that are in business, see what they found that's been successful. You know, we hear the term think out of the box so much. It's just what has happened. This stay-at-home quarantine maybe has allowed you to focus on a different area of your company than you focused on previously. And maybe you're going to be able to find some opportunities to make that segment of your business better. Talk to your staff. What are they finding out? Do they have some ideas? This is a great idea for a great time for some suggestions from them. What have they encountered? What are the positives? What are the negatives? How can that help us move forward? So just some different ideas, but to me, the main point is cash is king. There's more volatility than ever before. People are holding on to their dollars longer than they have previously. And how is that going to impact you? Do you need to kind of get into that game a little bit more than you did previously and work with your vendors, work with your customers, perhaps on your customers and clients accelerating payments, and you, when you're paying your vendors, just kind of laying the payments out a little bit more slowly than would be customary.
Thank you, Kevin. Thanks for your insights. That was terrific. And just to reinforce on the cash flow, it's not a one and done. It's a live document, not a crystal ball. Got to keep it on your desk and keep updating it as you go to make sure it's as current and useful as possible. We only have about 6 minutes left. So what I'm going to do is turn it over to Mike. He's got some interesting questions through the Q&A function, and perhaps we can handle a few of those before our time ends. So Mike?
Thank you, and we have been working feverishly to kind of answer your questions online. Kevin or Aaron, real quick, if possible, can you talk about, is there a deadline for borrowers to file the forgiveness application?
Yeah, thank you, Zito. Yeah, I was on mute. I'm sorry. Right now, the original due date was 90 days after application was approved. They have not said anything about it, but obviously with the House bill, it's impossible to do that if the period of using the money is past 90 days. So that right now is up in the air. That's, again, one of those items that I would look at as one of those assumptions. Right now, keep in touch with your lender. A lot of you who have borrowed money are now working with brand new lenders, not necessarily a bank you've been dealing with for years. You have no relationship there. Now's the time to reach them. Now's the time to speak to them. Prepare yourself for the fact that there is going to be a major crush, and a lot of this may actually hit a month and a half from now, which is right around the July 15th deadline for tax returns. So there's a lot going on right now. You are going to probably need some advice from your accountants or your professionals. There is a lot of detail to put together. Those applications are cumbersome. So right now, like I said, even if we don't know a date it's due, start working on the documentation.
Thanks, Aaron. Kevin, real quick, a question came in, are proportion home office expenses and mortgage interest and utilities includable in qualified expenses? Can you just share your thoughts quickly?
Sure. Yeah, if you're self-employed and have been working from home since the beginning of this crisis, you can use some of the PPP funds to cover utilities, rent, mortgage interest. If you previously claimed the expense on your 2019 Schedule C, that's going to be permissible. Only those expenses are going to be eligible for forgiveness, though. Other home expenses are not.
Got it. Thanks, Kevin. So I want to address a question Janelle posed. Her question is, my PPP loan was over $2 million because of 2 affiliated companies, which obviously subjects her to audit. And so she wanted to know, you know, kind of if she qualified for, you know, the loan based on the guidance, could the SBA tell her that it's not forgiven for other reasons? And so, you know, this kind of gets back to the eligibility question. And we've basically told our clients, contacts, that the best thing to do is reach out to legal counsel. It does deal with legal language, and, you know, they can provide you further guidance on the eligibility question. And then I think the second part that the SBA will look at is the actual formulaic calculation of the forgiveness. And so that'll just, you know, and this is essentially what we try to cover here, what's allowable, what's not. And then so, you know, those 2 items I think are strongly going to be looked at. Aaron, real quick, a question that kind of relates to what you were talking about. There was a question, can we still apply for forgiveness after the initial 8 weeks if we have used our funds, even if it changes to 16 or 24 weeks? Again, the guidance hasn't been released, but general thoughts on that question.
Yes, so they did cover that, and in the House bill, what they're doing is they're giving you an option to use the original 8 weeks, because they do know a lot of people have received their money, have been very cautious monitoring it during this period. And if you got your first money when the first came out, you're already in week 7, and you've been very careful. So right now, the way it's written in the House bill, and it doesn't appear from what I hear in Washington that this part will be changed, you are going to have the option to pick the other week, whether it be the 24 weeks or the 16 weeks, depending on how this ends up, which hopefully we'll know in another day or 2. That appears to be it. But again, I can't stress enough, this is not law yet. Right now, all we know is it's 8 weeks. You know the 8 weeks. That is the actual law right now until the other bill becomes final and gets signed by the president.
Got it. One more question from Janelle, and this will be the last one. When you received your PPP loan, you provided your internal staff with some bonuses. This was a separate payroll. Will it be looked at negatively, you know, not to be considered for payroll costs? So one of the internal final rules came out and said bonuses are eligible. I mean, again, you are subject to the limitation of $15,385 per person. So, you know, as long as I think it's within those guidelines, that, you know, you should be okay for that. But we can certainly touch base off the line, you know.
So we're hitting our 1 hour mark. I want to thank everyone for joining our virtual lunch. If we did not answer your questions, we will attempt to provide supplemental responses by email. Thanks again for joining. Please feel free to reach out to any of us if there are any other questions. Have a great afternoon, and please stay safe. Thank you, everyone.
Thank you, Pat.
Thanks, Pat.